All right, good morning, everybody. Thank you for coming to the Power E Mini Group meeting today. I'm Bill, and I have Jeffrey on the Skype, and we have a really interesting presentation for you today, and it is all about setting up ATM strategies. So I will let you go ahead and take it away, Jeffrey.
All right, good morning, Bill. Yeah, we're going to do some basic ATM setups for those of you who are following the micro scalper. Uh, we talked about last week how we're going to be converting over all of the scalper channels to this new 20-minute micro scalper. It's greatly enhanced, and we basically get finer tuned entries and we get a little bit more bang for our buck. So we're going to be continuing to do training now on how to basically enhance our money management and trading off of those new scalp ranges, the dynamic trigger range. So let's go to the very first slide there, Bill. Trading the price impulse move.
Okay.
All right, so in our type of trading, what we're doing, the dynamic trigger range, which if you've watched some of the videos and read the documentation, you understand it's basically a noise suppression algo that uh, leads us right to the edges where we can expect action to, basically erupt, initiate. And what we're looking for is we're looking to trade what we call price impulse moves. This is basically where, and this is something that repeats itself over and over, hundreds of times a day, every day of the week, every day of the year. It's something that just is a repetitive, uh, cyclical type of thing that occurs in the markets, and we're trying to line up with it and take advantage of it. So what happens basically is we get price forms a congestion range, congestion levels, right, where it gets basically stuck, and we're not getting any forward motion. We're basically getting kind of like up and down, sideways chop type of price movement. Then as things build, price will break out of those congestion areas into the free and clear open territory and go on a tear, basically, our price impulse move. And what we're going to do today, we're going to show examples with the ES, because that's what we got hooked up to the new micro scalper. But as we go, when we do the next upgrade and we get everything converted over, we'll have all the configurations for all of the different symbols, so you can set these up. We're going to just focus on the ES today so that you can get an idea of how these ATM setups work, and then you can extrapolate and set those up if you're trading another symbol, for instance. So the concept is that the dynamic trigger range, its job is to formulate and compute these congestion zones and basically give us the edges of that congestion, right? And that's the dynamic trigger range. So when we get a breakout of that congestion zone, then we're anticipating, we're expecting some form of, you know, increased energy and increased directional price movement, right? So again, the price impulse move. So our job is to try to get in there and take advantage of that price impulse move and capture some points, right? So I'm going to be showing you three basic ATM setups that you can begin to employ. And remember, we're on the micro scalper, the new 20-minute micro scalper for the ES. We're trading off of a 20-second chart. We've been talking about that the last couple of trainings, how you can really fine tune your entries and keep tight stops, that type of thing, and even trail your stop. I'm going to show you some auto ATM setups today that will help you out. So let's go to the next slide. We'll take a look at the very first ATM setup.
Okay.
All right, so let's take a look at the very first ATM setup. And again, these are Ninja I got Ninja 7 examples here, but again, if you're using some other platform, you should be able to replicate everything I'm going to teach you here today. You just might have to do it. It's a little different setup in the different platforms, right? But everything is fairly basic, and you should be able to, if you're using TradeStation or Thinkorswim or one of those other platforms, you should be able to easily set this stuff up. Okay, now the first kind of a setup that we want to look at is the, super scalp configuration. It's kind of a one shot, one kill setup. It's designed to keep the risk really low and then, basically hit your targets that you're going for. And the great thing about the ATM setups, and that stands for automatic trade management, is that you can, once you get these configured correctly, you can focus on taking your entries, and then the ATM basically takes it from there. Right now, you're able at any time, if you have an ATM setup, you're able to get in and move the orders around manually as well. And if you're using like the chart trader in Ninja, you got your horizontal lines, you can just drag and move those around. But the ATM, what's nice about it is it enforces some basic safety rules. Like for one is you get to stop in. Some folks get real lazy and they think, oh, I don't need to stop. I'm watching it. And that, 9 times out of 10, that might be fine, right? You're sitting there watching and the price is not moving that fast. But we get rogue price spikes when the market goes wacky because of a news catalyst that hits the airwaves, right? And before you know it, the market can be going against you in a big way. And you're like blinking, going, wait, what happened? What happened? And price is already selling, 6, 8, 10 points away from your entry in the negative, right? And you could have been stopped out like at a point below type of thing, right? So you have to always use stops because there's going to be the once in a while rare rogue event that will uh, uh, move against you in a big way, and if you don't have a stop, you're in big trouble, right? And you just got to make all that back up again, right? Always best to take the quick stops, get on the sidelines, recompute, go at it again, and not take too big of a loss. So this first ATM setup, it's designed to basically get an initial stop in and put an initial target in, and when price makes a certain move in your favor, it ratchets the stop a little bit. Okay, so it's a little three-pronged deal here. Initial stop, target, and one price ratchet of the stop. So here's how this works. Now, let me just preface this and say that there is no perfect ATM setup for all market conditions because the market conditions constantly change. And so what might work perfectly one day might kind of suck the next day, right? So, but I'm going to show you like a real basic generic setups, and then you can extrapolate and kind of manipulate those a little bit depending on the market conditions. So, for instance, this one here, you'll notice if you look over to the left on your ATM parameters, the stop loss is 6 ticks, so 1.5, right? Um, your stop loss can be anywhere from 6 ticks to 2 points. Any more than that on this kind of trading, and you're not buying yourself anything because basically, if we're taking these precision entries off of a 20-second chart and we're using the dynamic trigger range, and we're trying to really fine tune our entries, giving more than 2 points of wiggle room it doesn't really buy you anything, right? So the concept is to be out quick. And with this particular setup, you'll see that all you need is a little bit of forward movement and the stop even gets tightened a little bit. So the profit target on this one, you could set to 2 points, for example. All right. So 1.5 risk, 2-point target. And then notice on the bottom there, it says profit trigger. So that means when we hit 6 ticks, what it's going to do is it's going to bring your stop to break even. Okay. So you haven't hit your target yet, but within 2 ticks of it, and so you're saying like, hey, I got a point and a half wiggle room now between where the price is and where my entry is. Might as well protect it, break even, because one of two things is going to happen. You're either going to run through and hit the target, or you could come all the way back down and fail. And one of the deadly sins is you get really close to a target and you let that turn into a loser. That's a bad thing to do. So what we're doing here basically is we're saying, okay, we're really close to the target. Let's get to break even, and then it's a win or a break even trade. There's no loss at that point. Okay. Now, obviously, we can adjust the settings on this. So, for instance, if you wanted to do a 2 point stop, and then you could say, okay, well, maybe my profit trigger will be 5 ticks. So as soon as I get a point and a quarter in my favor, it's going to get me to break even, right? So, right? Or we could do a setting where we say, okay, my target is 2 points and my stop is 2 points, but as soon as I get a point, um, pull my stop up to a point below my entry, right? So we have all these different variations, but this is a good one to work with. This one is a fairly high frequency. When we get these really good precision entries, 2 points, taking 2 points out of the ES is not a big deal, right? We can get, you know, 2 to 5 point impulse moves quickly off the ES, especially, if you're trading the micros. And as I always say, anybody that's kind of new to this or starting off, start with the micros, because you have to be able to trade without fear, because the edge that we develop in trading occurs over this series of trades, meaning that it's not just about, you're not just going to take one trade and that's it, right? We're going to be doing this on a daily basis, over and over, repetitive. So the edge is built over the long series. It's totally possible to stop out 3 times in a row, but then if you keep going, you make it back up, right? But if you get gun shy and quit, then you lock in those losses. So starting off with the micros gives you the opportunity to trade, even if you're taking some stops. They're not big hits compared to the regular size contract. Develop your skills, hone your money management, all that kind of stuff on the micros, then scale up to the regular size contracts. You'll be doing the exact same things. You'll just be using different leverage contracts. That's all, right? And this is the way to build your confidence. Now, so this kind of setup is good for, let's say we've got kind of a lackluster, choppy kind of a market that, we're not really going gangbusters. Okay, like today could be kind of an example where we're we've got some forward motion to the upside. We've made some decent moves, but it's been kind of slow and ratchety, up and down a little bit. So pulling off a couple scalp trades, getting those under your belt is not a bad idea. As a matter of fact, when you start off the day and when you start off the week, you might want to go what we used to call like icebreaker trades. You take a few trades, you try to get quick wins. You start off things positively, you get some risk capital, right? House money, then you can work with that, right? So this is the ES Scalper ATM setup number 1. Let's go ahead and go to that next slide, Bill.
Okay.
All right, so what I'm going to show you here is a nifty way to do an auto trail configuration on your ATM setup. And the first thing we'll do is we'll talk about the premise of it and how it works and how to set it up. And then I'm going to show you 2 examples of how to use it. Um, in the Ninja platform, down on in the next slide, we'll actually show you what button to press, but you got a little custom button on the stop strategy. You'll press that and it's going to pop up a little window. And in the middle, you've got this auto trail, these auto trail parameters, and they're in ticks. Okay. So there's three parts to this. Now this can be a little bit confusing, but if you just set it up the exact way I'm going to show you, it'll work. And let me explain what these are. So if you're using a different platform, you're going to have to kind of figure out how to do what I'm showing you in that platform. So here's how this works. Let's take a look at the first column there, the stop loss. That would be like the initial stop, okay? And the frequency occurs to how many ticks. I'm sorry, let me back up. The stop loss refers to how far the stop needs to stay away from price action. Okay, forget the initial stop because that's determined by the main screen. You put 6 ticks or 8 ticks or whatever. This stop loss column refers to how close do we want the stop to be maintained from price action. So we got 8 ticks. Now, the frequency refers to how often do you want it to evaluate this trailing stop. So what that 3 means is every 3 ticks of forward movement, right? It's going to say, okay, let's adjust the stop. So when price moves 3 ticks in your favor, then it's going to say, okay, we got to maintain the stop 8 ticks away from where we are, right? That's what that means. The third column, the profit trigger, is what starts it to begin with. So I got it set to 5 here. So that means when you get a point and a quarter from your entry in your favor, it's going to go ahead and do the first evaluation and say, okay, let's get that stop 8 ticks away from where we're at. So what this normally does, and I'll show you in the next example, is better. But two things about this now. A, uh, you're always going to give back 2 points, right? From the farthest action that price can make if you just let this rip and don't make any adjustments on your own. Okay. So because the stop is always going to maintain 2 points of distance. So that's kind of, you could look at that as kind of a negative, right? Like give back 2 points. However, once this thing hooks into a super strong impulse move, uh, this thing can ratchet, 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 and before you know it, pull 10 points out of the market and you didn't even lift a finger, right? So what you're doing is you're trading that wiggle room for, being able to stay in bigger moves. Okay. So we're always going to have a situation where we've got some impulse moves that are kind of weak and meandering and they kind of fizzle and whatever, and they're going to come back and like take you out and you give back 2 points. On the other hand, we can get into these rip roaring moves that just take out of nowhere. In fact, we've had a couple of them this week. Yesterday was a big move to the downside. The day before, actually every day this week we've had like big rip roaring type of impulse moves that take off out of nowhere. And this little trailing stop configuration worked like a charm, right? It's just like bing, 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 bing. It's just auto moving that stop. And remember, I mentioned that when you use these ATMs, you can also get in there and adjust things manually. So what's nice about a trailing stop configuration like this is, let's say that the market is kind of trending, and we talked about how do you know if the market's trending last week. We talked, about if we're above or below the opening 5-minute range, if the volume's good, if we're making higher highs or lower lows on a down move, then we've got a trending market. And what's nice about a configuration like this is you can get in. As soon as you take the entry, it's set up to take over. And literally, you could like walk away and go do something for a few minutes. And you might come back, and to your surprise, the market's moved 10 points and you got a nice trailing stop. Now you can sit down using the techniques I've shown you on the 20-second chart where we like trail, 2 and 3 bars back, that type of thing. On the 20-second chart, you could fine tune it. And so you could, in theory, cut that 2-point give back down quite a bit, right? To maybe 1 point or 2, 3 ticks, depending on the 20-second bars. You follow me? So this gives you a way, and even if you don't, even if you walked away and got stuck on a phone call, this thing's going to keep you in as long as it can keep you in, and then take you out after a nice move, right? So think of the term trade-offs. We're trading, we're trading that wiggle room for the potential of catching big runners. And big runners, again, a lot of times they're news catalyst driven, and the volatility is pretty high. So we want to give it, it wouldn't make sense to give it like a point wiggle room because it's too close. You're just getting knocked out of that. But 2 points tends to be like the magic number. And you can experiment around that. If you want to make it a point and a half, it's up to you. But okay, so let's go to the next slide there, Bill.
Okay.
All right, so ATM setup number 2 is a way to incorporate this auto trailing stop. Now, in this, the first 2 ATM setups I'm showing you are one position setups. In other words, you're either doing 1 contract or 2 contracts or 4, whatever, how many contracts, but everything is off at the same level. You're not scaling at all. All right, that's going to be the next ATM setup. So what we're doing here is we're saying, okay, our stop loss, if you notice up at the top there, we don't have a profit target. We're going to let the trailing stop always take us out on this. Okay, unless you do, unless for some reason you see a target and you go, okay, well, I'm going to stick a limit order there, right? You can do that. Remember, this is kind of half automation and half manual if you want it, discretionary if you want it to be that way. So notice there is no profit target. There's a stop loss at 6, and it's the same kind of setup. Once we get a profit trigger of 5 ticks, so that's basically you're going to be a point and a quarter, it's going to start evaluating the trailing stop parameters. And so what's going to do is it's going to say, okay, at a point and a quarter, I got to move that stop 8 ticks away. So what that does for you is if you have a 6-tick stop, it's going to cut that in half. It'll when on the very first evaluation, when you hit a point and a quarter, it brings the 6-tick stop down to 3 ticks below your entry or outside your entry. Okay, and sometimes those are going to get hit. It's just the nature of the beast. But the idea here is that every time you get 3 ticks in your favor, then it's going to go ahead and ratchet another 3 ticks behind. So the very second time it evaluates, right, on the next 3-tick move, it gets you to break even, and so on and so forth. So -6 ticks, then -3, then break even, then +3, then positive point and a quarter. You follow? So this is a great little setup, and so this ATM setup is designed to auto trail for maximum gains on quick price impulse moves in your favor. And again, it's a one-shot type of thing. You're not going to scale out half your position or anything like that. So between the two now, the first one, which was you had a specific target that you're going for, and this one, these two ATM setups, they're very basic, but they're very powerful in the fact that, again, we like to keep things like simple and not complicated, so and things that actually work over the series. So the two ATM strategies that I just showed you, if you're a beginner and you're coming in with those micros, just think scalability. If you can make these things work with one tiny micro contract, right, over the series, then you can easily begin to scale up size. Remember, 10 micros equals 1 regular size contract. So in other words, put these two ATM strategies into your little trading toolkit, right? And trade 1 contract of the micros and do that for a week or 2. If you show positive results, then go to 2 contracts. Remember, you're still not scaling anything. This is all, one entry, one exit. Keep it simple. Then you can literally build like that, and you could trade this way forever. I mean, you don't have to do any kind of scaling if you don't want to. Again, things work over the series. Now, the important thing is this: the the important thing is to have a little flexibility. So use that first ATM setup where you're targeting, 2 points or point, whatever your target's going to be, to get your icebreaker trades, your quick wins, or on days where it just ain't happening, where there's not a whole lot of action, go for the quicker targets, get your trading done and quit before you give it all back. Okay. On the days that there's, you can sense and you see that there's lots of energy in the market, you got to open up and let some of these runners take off, because you'll be pleasantly surprised. You have to incorporate some runners into your trading mix, because they help clean up some of the messes that you might have made, right? They help pay for commissions. They'll help wipe up some of the, it's like clean up on aisle 7. You get in and catch a good runner, it takes care of, commissions and a bunch of stop outs, cleans it all up. If you're a super scalper where you just go for, let's say, 1 point all the time, you have a dilemma, which is that you have to maintain such a high win rate. Okay, and it's very difficult to do. Yeah, I mean, I'm not saying you can't do it. I'm saying for the average person, it is not easy to do that. Why? Because you could come in on a given day and your very first 3 trades, you stop out on all of them, right? Now, how do you make, you know, 3 full stop outs up if you're just going to be going for 1 point targets, right? It's very difficult. So that's why you got to open things up a little bit here and there. And but between these 2 setups, the quick scalp and then letting things run with the second ATM setup, you've got a really good basic arsenal to play off these uh, dynamic, the micro ranges now. Okay, tools. Okay, now let's go to the third ATM setup there, Bill.
Okay.
And on this one here, this is a 2-part scaled exit. All right, so let's talk about that. And there's pros and cons to everything. There's going to be days where this is going to work like a charm, and other days where it will work against you. But let's just talk about how this is set up and what this gives you. Now, the idea here is this. The idea is that as we build size, if we get really good at our uh, really finely tuned entries, what we're basically saying here is, look, uh, I'm going to be really good at being able to get a point for sure, right? On almost all my trades, I can, get a point. If you can do that, you can take off a portion of the trade and basically get to virtual break even. In other words, notice in this example here, well, let's talk about the top part. You see how it breaks it down into 2 stages. You got quantity of 1 and 1. So this is just an example with 2 contracts, but again, everything's scalable, so it would work the same way if you had 4, 6, 8, 10. Everything just gets cut down the middle. The entry is taken at the same time, right? So you go all in with the full entry, and the stop loss is the same, 6 ticks. Again, remember, these numbers are slightly adjustable. 6 ticks, 7 ticks, 8 ticks. You don't want to go usually more than 2 points though on scalping technique. It doesn't buy anything. Now notice in this one on the first contract over on the left there, you can see at the top, profit target 4. So what that's saying is when you hit 4, let's look at the custom tab there, which opens up another window. See, it says profit target 4. So what it's going to do is it's going to pull off the first contract and exit at 4 ticks, a point. And notice in column 2 there, the second, target. On that custom, it's basically saying, okay, the remaining contract, when it hits 4, then bring it in 4. Okay, 4 under our entry. So what that does is get you to virtual break even. All right. So what you're doing is you're making a trade-off. You're saying, okay, I'm willing to like cut my position in half. I'm going to lose profits, future profits on half, but I lock in a point and it gets me to virtual break even, right? But you're still 4 ticks below your entry, which means you still have 2 points of wiggle room. See, look at it this way. Once you go through the risk of taking an entry, then your greatest potential is being able to stay in, right? I mean, because you took the risk of taking the initial entry in the first place, you got to move in your favor. So it's kind of like getting a jet off the runway, right? You get off the runway and you get into the free and clear a little bit, and the most dangerous times of flying in a commercial airliner is takeoff and landing, right? Because you're close to the ground. So when you are able to get off the ground, you immediately start getting into safety because you're getting away from things you can hit, right? So think of it the same way with these ATM setups. So getting a point is able to get you to virtual break even, right? But you still got 2 points of wiggle room. You see, that's what you're getting. That's what you're buying. Don't worry about the point. I mean, the point you just made is obviously if the thing goes on to run, then that's just another point you got, right? But the real benefit is that we get to safety quickly, but we still maintain wiggle room. Okay, and that's the key thing. You planted a seed and you gave it enough wiggle room to if it's going to work, you're going to be able to stay in. So that's what you're doing here. Now, the negative is, if you get hit, if you get knocked out, you're getting knocked out on, your full size, right? That's why it's important, in this particular instance, let the runner run, you know, because uh, don't, when you think about these ATM setups and your entry configurations and all that, get away from worrying about all this, like, win to loss ratio in the beginning, because it's kind of meaningless. Like a lot of folks say, oh yeah, you need like 2 times, profit over your risk. Um, yeah, that's great, but that's if you know, that would make sense if you only had a static, entry stop target, right? And it doesn't change. Our stuff is very dynamic, right? Because as price moves, things your stop starts to move, and so we never have, you can't judge it like this a strict 2-to-1 profit ratio type of thing, right? So in other words, what that means is if your stop is 2 points away on 2 contracts, but your first target's only 1 point away, uh, don't let that throw you off, because the real potential is just hitting that first point, getting to virtual break even, and then that second contract or the second part of your position is wide open. That thing could run 10 points if it wanted to, right? So you've opened up the floodgates, but you've protected against risk. Okay, so that's what this ATM strategy is good for. Now, again, if you're in another platform, you're just going to have to figure out how to emulate these setups. But these are the 3 tried and true types of setups that I recommend. Now, some people get real hung up and they like have like 3 target, the first target, second target, third target. Yeah, you can kind of do that. My take on that is, uh, when you here's what you got to understand. If you put a limit order in at a certain price, you are limiting your gains, right? You're going to have times, yeah, you're going to see it where it actually goes up and takes you out to the tick and then turns, right? And that's it. But you're going to have other times where it can go 3 times more distance than where you were going to take your exit. So I'm kind of the mind where, pull off some quick profits on a portion and then, you know, let things run. Let the price action uh, take you out on the final one. Now, the final thing I'll say about this is there's a couple, uh, I don't want to say caveats. There's special conditions. Let's say that you're either towards the close of the session, or last week we talked about the ideal time frames to trade. Like, so let's say that you're like right now, like this is we're in the we're finishing up the first 3 hours of the session, which is where the market tends to kind of get dull. So let's say that you were in a trade, and your second part of the trade is running a little bit, and you hit that first target, and so your virtual break even, and then the auto ratchet like is ratcheting along, and maybe the auto ratchet on the ATM configurations got you locked in with 2 point gain, right? But then you see the price racing up to a level, it's kind of trying to make a new high or something, and it's racing up to a level, and you see like, ooh, 6 point gain, right? If I can get out there, yeah, go for it, because you're right on the edge where you should be quitting anyway. Take the profit, run. You follow me? So there's going to be special considerations like that. But if it's early in the market and the market's hot, let that sucker run, because you'll be pleasantly surprised sometimes at how much traction you can get. As a matter of fact, this ATM setup I had running yesterday on the big down move we had, and it basically locked in about 20 points, just hands off, right on the way down. It just auto ratcheted, auto ratcheted, auto ratcheted. And if I had said, "Ooh, I'm going to pick a target at 5 points," see, I would have gave up 15 points. All right. Now, these are the basics. You can work with these, and these are ideal to work with off of the micro trader, the new dynamic trigger range. These are not to be used with the power target system, the momentum systems. They have their own stops that you work with. Okay, it's a different animal. All right, I'm ready to take any questions there, Bill.
All right, let's see what we have here. Um, well, somebody's asking about NinjaTrader 7 versus 8. And what I will say about that is that, it's interesting because we have users that are still on Ninja 7. I think that people that have been using NinjaTrader for many years, they get used to 7 and they like to stick with it, and it's a solid tested platform. There's not any changes being made. And so, interestingly enough, newer people tend to obviously gravitate towards 8 when they come on. And so, I can, it's very similar, very similar. I did a blog post about a week ago about the delta neutral stop, which I found kind of interesting that you didn't mention the terminology delta neutral stop, but that's essentially what we have, in this third ATM setup. Am I correct? Basically a delta neutral stop.
Yeah, yeah. This is basically the delta neutral concept.
Yeah.
The uh, right. The remember, there's physical break even where your stop actually gets your stop is actually sitting right where you took the entry, and there's the delta neutral, which is the virtual stop, which is basically you get 4 ticks in your favor, you can move 4 ticks below. You got two points of wiggle room, and you can't lose, right?
Yeah.
That's the delta neutral.
Yeah, yeah. Oh, so anyway, what the comment or the question was is about 8, and it's really pretty simple. If you look at the screenshots here, and on the replay, and we'll post this, then you can pretty much figure out how to do it in 8. It's very, very similar. So the 8's a little bit trickier, and I'll be honest with you, I'm excited to sort of dig in because I've been using 8. I switched over, a while back, but I'll be interested to dig in, and I think it would be relatively easy to set this auto trailing stop up in 8. Just it's almost the same screens, really.
Yeah, yeah. What they did in 8, and just so everybody knows, um, I'm on 7 and I have not gone to 8 yet. And the reason for that is because we have 5 years of legacy code built up in 7. And they did a no-no when they went to 8, which is whenever you do a new version, the ideal thing is to make everything backwards compatible. Well, they didn't really do that. So um, they're stuck running two platforms for a while. And so that's one of the reasons I stick with 7, is because everything that's running the system, all the code that I've developed over 5 years, it's all 7 specific. And eventually, I'll probably upgrade everything to 8. But there's a lot of stuff they did, and most of the big changes were not really anything to do with order execution or anything like that, but more visual properties. Like you'll notice all your 8 stuff is like black, and they have new like graphic properties and things like that that you can work with, and that's what requires a lot of reprogramming. So I just haven't done that yet. The so like Bill said, if you go try to set these ATM strategies up, the screens might be a little bit different, but the same parameters are all there somewhere, right?
Sure, sure.
And again, if you're in another platform like TradeStation, Sierra Charts, Thinkorswim, um, what's the other one that's a good one? Uh, you can emulate all this stuff, but you just have to figure out how to do it in that platform.
Yeah. Yeah, one of the points that you made about opening it up and letting letting the runners sort of go and take care of themselves, I think is one of the most important things because as we've seen this week, we've had some really significant moves. And so imagine, like you said, that you're a scalper, taking 3 ticks or a point, and then you get in, you get filled right away, and then you watch like we saw yesterday, where you got that 20 something point drop, which incidentally, and it's funny that you mentioned that because I caught that one too, and I was trailing the stop manually like 2 bars back. Like after a certain amount of time, I was using that little manual strategy you'd talked about recently, where you just basically, you got a real good trade working, and you just continually drag that stop up, leave it back a couple bars, drag it up, leave it back a couple of bars, and it's amazing when some of these news events hit the wire now, you get these gargantuan moves. And something else I want to mention about that is it's not a bad idea in this environment to sort of have an idea about these economic releases that come out, right? Because we had 2 huge drops this week that occurred right at 10 o'clock, right when the ISM numbers or the PMI numbers come out, and so you want to be extremely careful when these economic releases come out. And it also goes back to the point of having an ATM strategy set up so that you already have a stop loss in place, right? I mean, imagine if you were totally unaware of the economic numbers coming out and you're sitting there and you're in a trade, you don't have a stop in, and I mean you could literally like turn your head for 2 seconds and then look back at your chart and the price has moved 8 points, right?
Yeah, exactly. Hey, do me a favor. Let's go back to that last the ATM setup number 2 and talk about that a little bit more.
Okay.
But yeah, you're exactly right that the market will service up nice runners and nice impulse moves. And one of the issues is, especially when you've been sitting in front of the screen for maybe a couple hours, you can get kind of dreary-eyed and dopey-eyed type of thing, and the action can hit, and you're like get befuddled. You're like, oh, what's going on? What do I do? What do I do? Whereas if you just turn on one of these ATM strategies, the auto trailing strategy, it just kind of takes over, right? And you can like, you know sit back and just let it rip. Now, let's mention one other thing here with this setup number 2. And again, in the beginning, I highly recommend do not complicate the way you're trying to trade, because you know I see these things where people set up like 5 targets and three different stops, and it's way overkill. Uh, you might have, once in a blue moon, the market might make a perfect move that's going to take out that ATM setup like that, right? But for the most part, one of the things about the futures market is we got great leverage, right? That's why we trade it. We simplify the process. We don't have a hundred stocks to try to deal with gaps ups and gap downs and none of that jazz. We don't have to convert to percentages and do all these calculations on none of that jazz. We got a nice simple thing to trade, either long or short. We got nice leverage. One of the things we got to deal with is the volatility. All right, volatility is what gets you. And so don't go in there and get knocked out a couple times, get frustrated. This is the nature of this game. It's like playing rugby and then getting angry that you got muddy. you know that's part of the game, to be down in the mud and whatnot. So with this ATM setup number two, again, this is a one shot deal. You're going, and again, I got one contract here, but this can be scaled up. Like, you can keep the same configuration, trading two contracts, three contracts, five contracts. You're fixing your stop, but you're letting the profit target be open-ended. And so what's nice about this, think about it this way. Let's say that you go in, you're playing off the micro uh, dynamic trigger range, and you get an entry and you get stopped out, right? Either your 6 tick stop out, or maybe you've tightened it a little bit on your own manually, but you take a little hit, right? Now later on, just a few minutes later, you get another try. So what you're doing basically is you're fishing. You're fishing to catch something that's going to take off. And sometimes it takes, third time is a charm type of a deal, where you can literally get stopped out twice in the same range, and then the third move is the one that just takes off big time. Right now, I'm not telling you like sit there like a crazed monkey and just like hammer away and take entries, but there are times where it does take the market a little while to get the energy going. And so if you're in a situation where you can see that the market's trending and wanting to trend, and there's energy and there's volume, open it up and play this ATM setup number two. All right. Here, let me just make one more comment. So what happens with this is, remember, as soon as you hit a point and a quarter, it tightens your stop to -3. So that means you'd get a 3 tick stop out. On a micro, not a big deal. You're talking about a couple bucks, right? Then as you get 3 more ticks, you get to physical break even, right? So it's not hard to get a trade to break even. So see, it's a trade-off where some of your trades will hit the full stop. Some of the trades will hit a 3 tick stop. Some of the trades will hit a break even, and some of the trades will just take off and run like the dickens.
I think that's one of the main reasons to trade at least two contracts, even if you're doing it with the micro, is that you can use that first contract to get you to break even on the whole position, and then you still have the second contract to work for you in the event that you just hooked a big fish, as you say. And so, with one contract, trading's tough. It really is, because, you're kind of second guessing everything. But with two contracts, that gives you the flexibility to get the whole position to break even, and you still have that one contract that has a lot of potential for you.
Well, yeah. Here's the thing. You're right on that, but there's a trade-off, okay? And the trade-off probably equates to being this, similar. So the point is the once you hit that point and a quarter on this setup number two, you're basically pulling your stop to 3 ticks. So my point is this: when you first start off, I would stick with single entries, single exits. As you go and you build up, then go to like setup number three. Now, the other thing I'm going to mention about setup number three, where you split it in half, is this. Let's say that you are trading um, four contracts, right? You get to four, or let's say three contracts, okay? Uh, what do you do if you're gonna follow a uh, if you're gonna follow a scaling approach where, let's say, maybe every 2 weeks you add a new contract, right? This is a safe way to build size. Don't be in a hurry. Just every 2 weeks, if you've shown a profit, add a new contract, right? So let's say that you're at the two contract level on setup number three. You might want to show that's
I
ATM
have
setup
it
three
up.
again. Yeah, okay. So let's say that you're doing two contracts, right? So one off at your first profit target, and then the second one is the runner, right? So if you're going to add a new contract every week or every 2 weeks or however long you want to do it, what do you do then, right? So my recommendation is always pull the big part off at the first target. So let's say you were trading three contracts, so pull two off at the profit target of 4 ticks, then let the final one run, right? If you're going four contracts, so you split it down the middle. When you go to five contracts, it's three off at the profit target of 4, and the other two run. You get it? So that way you can, you know, leapfrog along and just add a contract a week. Down the road, if you want to add two contracts to keep it the same, equal number. But anyway, these are kind of the tried and true ATM setups that I've developed over the years. They work great with the micro dynamic trigger range, and there you go. Any other questions that we got today, Bill?
No, that's it. I'll just we'll end up here with one final comment that I have is that using these ATM setups will add consistency to your trading, right? Because it's all set up. You've determined the parameters, which another important thing that you mentioned is adjusting the parameters of your ATMs for market conditions, right? And so if you got a super dull market and 2 points is a stretch, you either want to probably sit on the sidelines or or use like tighter stops and and a little bit different parameters, and then when you get a hot market then you can go for the bigger points, right?
Yeah, if you like the ATM setup number one, which has got a uh, 2 point target. Uh, that can be adjusted. Let's say it's a weaker day, take it off at a point and a half. If we are getting bigger ranges in the day, like the ATRs are high, you can go for 3 points, right?
Hmm.
3.5 points. Are not difficult to hit in an active market. So that is an adjustable number, but 2 points is probably a good one to start with, because we tend to, the ES tends to make 2 point moves relatively easy. So
Gotcha. Okay, well, hey, thanks for coming on today and bringing us these interesting ATM strategies. And I can't wait to actually get the this auto trailing stop thing working and play around with it. So appreciate it. We appreciate everybody coming, and we will see you next time.
very good.